Welcome, everyone. This is another speak in our continuing economic alumni series talks. I'm really happy to welcome back Devin Stewart, who I know very well, who graduated in 2019 with his BBA honors in business and economics. A strong student for us, but also more than that, he was a strong participant in our department. Part of the Economic Student Society, of course, involved in many career nights and other activities within the university. Devin, after finishing his degree, went to University of Toronto to finish his master's in economics and has now moved on. Of course, had some work experience before that, and he'll tell you about that. And has moved on to PineBridge Investments in London, England, as a fixed income trader. We wanted to do something a little different, and just because we know Devin well, we wanted to make this a not just a sort of a chronological speak on where he's been, economics, and how his career has transpired, but also talk about some decisions that they make when they talk about risk and when they talk about investment, and maybe look at some investment or income statements to determine that. So it's going to be a bit of a mix, a bit of a workshop, a bit of a speak. So stay tuned. I think you'll enjoy this. We're not going to have a huge group, and there's a lot of people here we know already, who are familiar with these speaks. So ask questions and enjoy. So Devin, I'll give it to you.
Perfect, thanks. And I just reiterate what Azam said about questions and sort of participation. You'll recognize when you leave, or I recognize when I left school, just how friendly people are, and you get these opportunities now while you're in school to ask questions where there's no judgment. There truly is no stupid questions. I've asked them all before. So jump in, ask questions. It makes it more fun for me. You guys will get more out of it, and that'll be great. Yeah, maybe let's sort of just jump right off. I think if we start with the next slide, where I'll talk a little bit about how I got to where I am today. One thing I want to sort of avoid is, I think that if you look at how I got to where I am sort of backwards looking, it looks like it was well planned out and well thought out. And I sort of had all this figured out and eventually landed where I wanted to. The reality was, it was at times total chaos. I didn't really know where I was going, and it was really sort of figuring things out. So if you're sort of in your degree and looking at what you want to do, and you're not sure, and you feel like that's uncommon, it's not. At least it wasn't for me. I had an idea. I wanted to work in finance. I knew I liked numbers, but beyond that, I really bounced around, and it was through sort of trial and error and speaking with people and doing stuff like this that I figured it out. So I got to SFU, actually joined SFU as a business student. I hope you won't hold it against me. Early on, I ended up taking Econ 201 and really loved Econ 201, and really enjoyed the rigorous process. So joined the economics department as well in my first year, and knew that I wanted to do joint. And from there, ended up landing my first job in finance, which actually wasn't with a big bank or a pension fund or an asset manager. It was with a tech startup called Analysts. It's grown a lot since I left. But basically what they do is they make financial models for companies all over the place. So if you want a financial model on any publicly traded US equity, Analyst has one, and they were selling that database of models to asset managers. And so at that time, I thought that I wanted to be an investment banker. I didn't really know what that meant. But the financial modeling prep work was amazing, and really got me working in some of probably the more technical skill set. So I think at that point, learning how to use Excel, learning how to use PowerPoint are just super important skills in professional life that maybe I hadn't picked up as well in student life. From there, I sort of applied for banking jobs. As if anybody here, we'll talk a little bit about what investment banking is, and you'll know it's very competitive. Didn't get one, ended up getting a job at a firm called Leith, which is an asset manager in Vancouver, known for their Canadian equity, but they also have a US high yield portfolio. And so I was working with the US high yield portfolio. I sort of at the time figured, wow, this isn't really what I want to do. I think I want to go back. I want to become an investment banker, but this will be a good summer thing for me to gain a little experience. And next summer I'll be able to get the job I want. And so went and started working there and almost immediately fell in love with the work I was doing in US high yield. And so at that point, kind of thought, well, maybe investment banking isn't going to be for me. But also I've never done it. So maybe, I've enjoyed this. I enjoyed the work I did at Canalys. So maybe it was really unsure. And it ended up going and doing something completely different. I went to one of the Canadian pension funds and did private equity, which is closely related to, or closer to, investment banking. And I figured back on path, I'm going to become an investment banker. I've figured this all out. This is great. Again, started picking up more of those skills. The two jobs are quite close. While I was there, I got a job at National Bank as an investment banking summer analyst. It was like, sweet, I finally figured it out. I've got to where I wanted to be. And then went to National Bank, started doing investment banking. I didn't really enjoy it. Was looking back at like some of the stuff I'd done at Leith and had really enjoyed. And it wasn't that it was bad work or anything. It just wasn't for me. And so was kind of a little bit lost, realized that I wanted to move back to the public markets side. Again, I'll discuss what I mean by public markets side of work. And so decided the best way to do that is I'm going to go do a master's degree at the University of Toronto, network for 8 months, and I'll be able to find a job there. I went to the University of Toronto, and as you guys are kind of got hit with the pandemic, and realized that maybe there aren't the type of high yield, US high yield opportunities that I wanted. And so in September, decided that I was just going to move to London and find a job here, and eventually landed at PineBridge, where I'm now trading emerging market bonds. And so I'll talk a little bit about what I mean by emerging market bonds. If we just jump to the next slide. So I'll sort of discuss now what I actually do today, given sort of the bizarre mixture of different things that I did in the past. So basically, if you think about any country in the world that issues bonds, they will show up on that map. Orange are the ones that are classified as emerging, blue are developed, and green are frontier. I will trade all of them. I trade predominantly the sovereign issues. We have another trader who does corporates, but we sort of will cover for each other if somebody's really busy or if somebody's taking vacation. So, that's a lot. If you just look at those countries, I think there's like 53 emerging markets and then probably another 20 developed markets. And so it's been an awesome challenge in terms of the breadth of the work. It's also been something where I've had the opportunity. I've built a trading bot to trade the developed market bonds. And so it's been an awesome challenge from sort of a technical perspective. And then I personally find debt fascinating. I think bonds are some of the coolest financial instruments in the world. And so getting to analyze them every day and work really closely with them is a lot of fun. So that's sort of just a quick rundown of what I do. Are there any questions in terms of either the journey I went through to get here or what I actually do today?
I have a quick question, Devin, as I'm here. Could you just define for all of our sakes, just define what is a bond, and is it private or government bonds that you're dealing with?
Yeah, so they're debt instruments. So essentially, we are lending money um, to various entities, and it's both private and government, and what are called quasis. So we do corporations. We will lend to, for example, we looked at Thai Oil today, and Thai Oil borrows money and needs money to fund their operations, and so they will issue bonds, and we will buy them and collect interest. We'll also lend to sovereign entities. So that would be something like the Russian government, or the government of Ghana, or the government of Argentina, or the government of Brazil, or Romania, or something like that. So we will lend to government, and then in between the quasis are things like Pemex, which is Mexico's international oil company that's owned by, or closely or controlled by the Mexican government. What's my typical holding period? Are you trading specifically on technical measures, or do you need to be on top of geopolitical econ news for all your coverage areas? So I cover, like I said, I cover all of those names. Trying to be on top of all of those countries would be impossible, essentially. It is an awesome question. So the way it works is I work on a team of, we probably have 15 analysts who research and stay on top of the more geopolitical and fundamental information. We have 4 or 5 portfolio managers who are allocating between different bonds and sort of making sort of high-level risk decisions. And then we have 2 traders who are sort of executing that. And then on top of that, looking at the technicals you mentioned. So I will have the option when I'm trading to hold off on buying something if I think that there's a technical weakness, or there's some news that I think is going to be going to weaken it over a certain period of time. But I'm not necessarily looking at the longer term trends myself. We have an analyst team who will do that more directly. That being said, for me, it's been a great opportunity where just being involved and being in those discussions, you pick up on it and hear the discussions on those geopolitical trends. So you pick them up, but it's just not necessarily a main focus of mine. And then in terms of holding period, we typically discuss 6 months to a year in terms of how we're thinking about investments, but that depends more on end client. So some clients want a more unconstrained trading driven strategy. And so in those strategies, we will be more aggressive, and some clients tend to take a buy and hold approach. So we do look at quite a bit of it. We were previously part of AIG. So we do have a lot of insurance money, and those clients tend to be more sticky and want to just buy and hold it till completion. That's an awesome question. Thank you. All right. Any other questions? Perfect. Let's jump to the next slide, and even the slide after that. So looking at careers we have in finance, I've broken it up into 3 groups, and there's other ways you could split it up. This is a convenient way of thinking about it. And so I'm just going to run through, through internships and other stuff. I've had the opportunity to do a little bit of work in each of these. So I think I'm in a good position to maybe just give you guys a brief taste of what each means, because I think sometimes as a student, you don't necessarily know what the day-to-day looks like in a job. And so that can make it really tough to figure out what you want to do, because you sort of only hear the glossed over HR version that you maybe can get on the internet or from the official website. So the three categories can talk about sell side, which is you're not actually investing client money. You're basically selling your research or you're selling your expertise in a particular field to clients. Those clients are typically the buy side. So these are investors with money under management, whether that be sort of traditional asset managers, pension funds arguably could be in the same category, but they're a separate category in Canada for just because of their size and slightly different needs. Hedge funds, private equity funds, they actually have money. So they're actually doing the investing, they're making investment decisions with real money, whereas the sell side will simply be selling them research. And then I threw a couple into other that are places where people with sort of finance backgrounds can sort of start in or may end up in. They're sort of fields where people, you see people come into and out of, so they're very related. So let's just jump to the next slide and we'll talk a little bit about investment banking. I think this is the one where you see people, the most people sort of want to get in. And I also think that investment banking is probably the field where people maybe have the biggest disconnect between what the job actually is day to day and what they think it is. So what investment banking, what are you doing? You're essentially trying to help firms, typically it'll be corporations, do financial planning essentially, or execute financial transactions. So that may be they need to issue equity, they need to raise money through issuing equity or issuing debt. It may be that they're looking at buying somebody, or it may be that they are selling themselves to somebody. So it's looking at M&A opportunities and stuff like that. It may also be looking at sort of in a distress situation, looking at a restructuring work. In terms of day-to-day, I think one of the things that really struck me about investment banking is you get to go really deep. You get to do really intense research on an individual company or an individual deal you're working on. But the downside of that may be that you work on may work on the same deal for 2 months, which for me, I like a little bit faster paced. But in terms of opportunities to do research and look at something really in depth and get the absolute correct answer, investment banking is incredible. In terms of day to day, I think you do a lot of preparing presentation material. So typically you'll not necessarily have a deal all the time. So you'll be preparing presentation materials for your more senior members to go to corporations and pitch ideas. So you may, and from that, your clientele, your senior members will hopefully pick up business. You'll be on those deals and you'll be able to extract deals. So I'm going to read this question. One moment. Okay, so yeah, this is another good question in terms of what I didn't know while getting my current role, and that sort of how to develop and how to look for the environment that helps you work through this process. Yeah, no worries. I'm going to touch on this a little bit later. So I'll just run through the careers, and then I'm going to talk a little bit about early career and getting jobs. And I think it'll probably be better to address this question at that point, but it is a good question. So I think that sort of gives you a base idea of what investment banking is. If we jump to equity research, and I've included in this category, I've included research, and the reason is in Canada, pretty much the majority of research is equity research. You do get some credit research, which is essentially looking at bonds instead of stocks. And you may get a little bit of sort of economic or macro research. But generally, most of the jobs and opportunities in Canada will be equity research. That's not necessarily true in sort of London or New York or more broadly, but in Canada, equity research is more dominant. So here, typically you're going to have a coverage list. Let's say that you cover mining companies, and you're going to be, looking at your list of 20 mining companies. You're going to be providing presentation or research reports to your clients on the buy side and trying to recommend what the best company is for them to buy. So this is a little bit more tied to markets and investment banking. What this means is that day to day, it may be a little bit more unpredictable, but you still get those same levels of deep research where you'll be doing deep dives either on industry-wide or on individual companies and trying to find fundamental factors that make an individual company more or less interesting from an investment perspective. And so you see equity research tends to transition to the buy side quite nicely if they want to, because what they're doing is essentially the same thing. They're just looking at it from sort of a sales perspective, almost a consulting perspective than an asset manager might. And then, of course, there'd be similar things if you were doing macro research. You'd be following, macroeconomic trends in Canada and writing reports and trying to provide recommendations to help clients make better investment decisions. So in sales and trading, people tend not to separate these two. They really should, because they're two completely separate roles. So sales, I get to in my current role, get to interact with every day, and they're a lot of help. Essentially, what you're doing is you're building relationships with traders on the buy side and trying to convince them to trade with you. And there's a lot of ways that you're going to try and do this, right? One, you may try and just build a relationship. So that may be talking every day and sort of discussing, meeting and sort of going to dinner and discussing what markets look like. It may be providing color on the market. So as a salesperson, you'll typically have a lot of traders working with you, or traders will typically focus on small individual regions. And so sales may have a better global idea of what's going on. They may have hear things from multiple traders. Oh, every trader has told me that everybody's selling a little bit today. And when an individual trader thinks, oh, people are selling a little bit more today, that may not be important. But if everybody thinks that they're selling a little bit more today, that may be. So you may have a better sort of overall idea of where things are. And so you can provide insights to your clients. And then I think on top of that, just sort of, being in those connections. So you may cover sort of 20 clients and try and get as many trades done as you can. On the trading side, you are going to be focused on a particular asset class or a particular curve even. So you may, like I work with one trader who just trades the Ukraine sovereign curve. So all he trades is Ukraine bonds. And he's a specialist in that and will buy and sell any Ukraine bond. And so he's an expert in that one bond, but maybe doesn't have as much reach to look across other names. That's not to say he couldn't. He's a really smart guy. I'm sure he could pick things up, but it's just more typical on the trading side for people to have much narrower focuses and therefore trade one country or maybe a couple of countries, or maybe one country and trade the corporations that are in that country as well. So that's sales and trading. Asset management. So here, I think this is, again, one thing that people maybe identify with when they hear finance. You will have a pool of money and you will be researching to invest that money. So you'll be, maybe I work in a bond shop, so our analysts here will look and try and find bonds that they think are going to provide a better opportunity for us to make money. If you worked for a firm that manages equity, you would be trying to find stocks that are going to provide the best returns. And then, yeah, so we'll jump from that. Pension funds, I mentioned separately only because in Canada, there's such a big component of the opportunity set in the workforce. So the Canadian pensions are huge compared to other countries. And so, and they have within them a wide range of opportunities, from the more traditional asset management that I've talked about, where they're maybe buying equities or buying bonds, to they all have private equity arms, which I'll talk about in a moment. They'll have internal hedge funds. They'll have teams to invest in external hedge funds. They'll have teams to select funds. They'll have teams to look at risk on a systematic level. So they have a very broad reach and opportunity set. So I think people sometimes forget about pension funds because it maybe doesn't sound like the most exciting, but in Canada, the pension funds are really world-class and really have a phenomenal opportunity set. So if finance, and particularly the buy side, something you're interested in, they're a group of employers that you should look at. Hedge funds, they're smaller in Canada for mostly regulatory reasons, but basically you're going to take usually a more complex strategy of some sort, and you may be able to use something like leverage, long or short positions, derivatives, in order to increase returns. And you're very much doing the same thing as you would in traditional asset management. You're just going to be doing it in an environment where there's one, maybe more pressure, but two, maybe more opportunities in terms of what you can invest in and how you can look at opportunities. You can, in traditional asset management, typically if you don't like a company, you just can't own it. You won't own it, and therefore, when it goes down, you don't lose money. In a hedge fund, typically you could take a short position on that and therefore make money when it goes down. Private equity, this is a big growth one. Less so in Canada. No, even in Canada, it's growing pretty well. In Vancouver, it's maybe a little bit smaller, but you do see a little bit or quite a bit of real estate private equity. That's really sort of the growth driver in terms of private equity in Vancouver. What you're doing here is you're essentially going to go and buy the entire company. So instead of buying, 1 million shares and investing on the stock exchange, you just go and you're going to buy the entire company, and you're going to do it with the idea that it's undervalued. Maybe if you own the entire thing, you can make it more efficient. When you take it private, you can use more debt to do so. You can add more leverage and make it more profitable. So there's all sorts of things that you can do, but private equity tends to be closely linked in the finance with investment banking, because you're going to end, unlike the other ones on the buy side, it's going to be a much slower burn. You're going to look at, one deal for 2 months and do all your research, because if you're buying the entire company, you need to be absolutely sure it's the best option. And from there, you're going to make a bid and hopefully acquire it. And then you're going to manage it for, some of these private equity firms have holding periods of up to 10, 15 years, although I think 8 is probably more typical. So it's a very long-term business. And then, so financial analysts, basically working on the corporate side to try and achieve some sort of financial goal. I think people underestimate how large this is. All major companies have finance departments. They all need financial analysts, and the skills that you get from financial analyst roles transitions into the sort of other finance roles. Other finance roles can transition to financial analysts. I know quite a few investment banking analysts from Vancouver who have moved to sort of financial analyst roles in mining companies. So it's just an opportunity for you to work within a company. I have one friend who really loves it from the perspective of, when she was in investment banking, she was always an outsider making recommendations. Whereas as a financial analyst now, she's an insider and she's getting to make similar decisions and doing similar work, but doing it from an insider perspective and feels more connected with the process from start to finish. Accounting, people underestimate accountants within finance, but accounting is such an important part of what you do day to day. If you're looking at investments, you're looking at balance sheets, you're looking at income statements. Having a thorough understanding of that's huge. A lot of accountants transition and do finance. So just an incredible opportunity and a great way to learn and break in. And you see that the big four and accounting firms in general have these huge recruiting classes. And so in terms of getting that first job and getting your foot in the door, it can be a phenomenal opportunity. Typically split into audit and tax, providing companies with advisory on how to file and how to best structure their taxes. And then the audit side, basically making sure that companies' year-end reports, their financial reports are sort of within regulations. And then last but not least, consulting. Consulting is really a lot of variety. It includes everything from sort of management consulting, operations consulting, economic consulting. But somewhat similar to the sell side, you're basically trying to sell your expertise, typically to a corporate client, and providing with them recommendations on how to better run their business or how to achieve a particular objective that they have. So let's jump on from that. I'll quickly run through sort of some of the companies and which companies look where, and then I'll pause for questions. So sell side in Canada, the big ones are the Canadian banks. They all have large sell side operations. You see tons of other ones. I have Jefferies and Stifel up there, but there's tons, right? Goldman, Morgan Stanley, sort of the bulge bracket ones, the Swiss banks. Essentially, most banks that you hear of will have some form of capital markets groups or some form of sell side. On the buy side, I talked a bit about pensions. So I put BCI there. That's BC's pension. Can't remember how much they have. I think it's $400 billion. But they're based in Victoria. They have, all sorts of managers. I've also put CPP, which is the Canadian pension plan. They have offices in Toronto and all over the place, actually. But other big ones: Ontario Teachers, OMERS, which is the Ontario Municipal Government, AIMCO, which is the Alberta Pension Plan. There's lots of different pensions. TD Asset Management. So I mentioned that the banks in Canada are some of the bigger sell side operators. And so you might be thinking, well, if they're on the sell side, how can they also be on the buy side? So they'll have separate arms that do both. So their asset management groups will do the traditional buy side work, while their capital markets groups will do the traditional investment banking, and they're completely separate. There's actually firewalls between them so that they can't interact, so they couldn't sort of try and manipulate something. And then PineBridge, that's where I work, doing asset management. Yeah, and then other KPMG, who you'll know it as sort of an accounting firm, but they also have a consulting branch. All the big four do have accounting and consulting. Grant Thornton, that's I think the 5th biggest accounting firm, also has consulting. I had Thanksgiving dinner last year with a group of Grant Thornton accountants who had moved to London from Canada, who went to SFU, which was kind of a bizarre interaction to bump into. But very common for that accounting consulting mix to happen. CRA, Charles Rivers Associates. I have a few friends from U of T who ended up working there. They do economic consulting. So they'll typically look at sort of economic problems and provide more specialized economic advice. And then, where do financial analysts work? Amazon is as good an example as any. Lots of opportunities in terms of, they need to plan and think about how they're managing things from a financial perspective, what they're going to do with all the money that they make. And it is a lot of money. All right, any questions at this point? Cool.
I have a quick question. Oh, I'm sure there's some. Can I ask a quick question? Yeah,
Yeah.
Devin, in terms of sort of placing yourself, first of all, this was so comprehensive. It was amazing. Like I mean, the best I've seen done. So if you were to take into account your disposition, say you're more of a conservative type person, you know, handling other people's money is stressful, right?
Yeah.
But you are still interested in finance. Would you say more on the buy side type, direction?
Mhm.
And I would imagine working with pension funds, it's more of a conservative type, portfolio
Yeah.
management type thing. What would your advice be in terms of people's disposition and what directions they should go in?
Yeah, so I first, just on the comment on pension funds, the Canadian pension funds are very broad. So they do have some hyper aggressive, hedge fund style investment strategies. But you're right in general. I think if you're more the investment, the sell side tends to be more pressure packed, more up and out. They tend to work longer hours than you do elsewhere. So investment banking, working 70 to 80 hours a week. In equity research, you're working 50 to 60. In asset management, you might do 40, right? So those sell side roles do tend to be very, the sell side just tends to be more aggressive. It also tends to be younger and more ambitious. So you'll typically work with people your own age, you're all trying to get ahead. And that just sort of can lead to quite an aggressive culture. And obviously that depends bank by bank and organization by organization, but generally it's much more aggressive. Asset management tends to be more conservative. Obviously there's stress in managing other people's money, and it's a lot of responsibility. But there's also tends to be a culture of sort of deep intellectual thought, and tends to be very strong support in terms of learning and growth. And so I think it's maybe, culture-wise, I think probably a better fit for what you're describing. That being said, I think something like a lot of hedge funds and a lot of private equity are probably closer to that sell-side pressure cooker culture than maybe asset management, the traditional asset management firms would be. I would say one thing, like in Canada, cultures are generally pretty good. So you may hear stories of insane work hours coming out of like New York. Canada, you're going to work hard if you're on the sell side. You're going to work hard regardless, but you're going to work a lot of hours and it's going to be tough. But it tends not to be that pressure cooker, like intense style that you might get in the US or in the UK. So can I talk about the hard skills and soft skills that you thought were necessary to break into the entry-level jobs? Are there any licenses required to get your foot in the door that make it easier? Okay, so hard skills and soft skills. I actually had a discussion with my boss a couple of days ago where he said he just hired me because he thought I was a nice guy. So maybe hard skills aren't that important. No, I think so. It's a tough one because it varies between what sort of roles you're looking to achieve. So investment, I'll just run through them quickly. Investment banking, equity research, you're typically looking for really good Excel skills, really good PowerPoint skills. Attention to detail is going to be key, and sort of a confidence and a desire to do it. Because you're going to be working hard, and so they want people who know what they want. Sales and trading tends to be a little bit more, you tend to get more like mathy people. So, a bit of calculus doesn't go amiss, even if you maybe don't use it as much. And then I think on the sales side as well, that really social aspect is really important. And again, looking for people who really want to do it. I'd say in my experience with asset management interviews and pension fund interviews, in terms of getting your foot in the door, it's really about one, showing a passion, and two, ability to learn. So, being able, you get asked a lot, oh, what do you read? What books have you read? Do you, tell me about your favorite finance book? How do you think about an investment? What sort of, so being able to sort of, they don't necessarily want you to be perfect, but philosophically, how are you thinking about an investment, and stuff like that. Accounting, I've never really interviewed for, so I can't really speak to it. Consulting, I think the only difference with consulting is they'll do typically case interviews. So if you're interested in consulting, I'm not going to dive into them right now because it's quite complex, but you Google case interview and it'll give you an idea, or message me on LinkedIn and I'll go through it in more depth there. And financial analyst, similar. I would say on a whole level, Excel skills are huge. Being really good in Excel has been a huge advantage in my career. And then the ability to interact with people and to sort of build lasting relationships, essentially, regardless of where you are, is important. And sorry, there was another question here. Are there any licenses required to get your foot in the door? I mean, so CFA is the big one. CFA is great if you can do level 1. I'm writing CFA in a couple of weeks, the first level. I don't think anything's necessary, but yeah, CFA can help. Yeah, but there's no requirements in terms of licenses that are going to sort of be a miracle worker. I think, yeah, CFA is good, but that's sort of about it. And then the question from earlier, let's look at that. So what I didn't know in my current role and what I looked for in terms of a culture to learn that. Yeah, I think one of the things I learned later on as I sort of worked through that progression of internships and stuff was just how little I actually did know. Financial markets are huge. There's a lot of information, and even like you talk to people who've been doing it for sort of 50 years and they don't even really know, that they're still sort of figuring it out. I think one, just being honest with yourself, and sort of being aware that you don't know everything, having the control over your ego, to be like, I just don't know, and go and Google it or go look it up, I think is huge. I think culture-wise, you sort of flagged, how did I, a lot of it was luck in terms of landing into place that's really sort of focused on my development. But I think just a few things. One, the turnover at PineBridge was really, really low. And I think that was really a green flag for me, showing that I have seen places where, like they end up, people leave after 2 years constantly. My team, I think the average tenure is probably 15 years. And the next closest to me, I think, is 5. So people don't really leave. I think that was a good sign. I think when I spoke to other people in the industry around, they talked about how great the team was and how committed they were to developing people internally. So there are things like that. Yeah, it's tough. I don't think there was anything like I can explicitly pinpoint that I didn't know, because I just didn't know so much when I started. Where do I see myself in a 5 to 10 year time horizon, staying in S&T, geography, etc.? Yeah, that's an interesting question. I think part of the answer is I don't really know. And I think I've got myself to a spot where I'm happy not knowing. So I'm just trying to kind of, I think earlier when I was doing internships and stuff, I was always pressuring myself, what's next? How, where's my next internship? How am I going to Where's the more prestigious bank? Where am I going to jump to? Where am I? What city am I going to move to next? And I think now I'm just sort of trying to enjoy where I'm at. Living in London, I can fly all over the place, and it's reasonable. I'm enjoying the work right now. Certainly do speak with my boss about, where do I see myself? I think he sort of has a 5-year plan in terms of he wants to have our trading desk sort of feed into their analyst pool instead of hiring external analysts. So that's certainly an option. They do develop their sort of portfolio managers internally, which is something that I think could be interesting. So I think the doors are sort of open, and I'm happy with that, but I'm not sort of fixated on any one thing. I'm just trying to enjoy and learn as much as I can. In terms of geography, that's also a tough one. I think Canada's tough for me because, the financial markets maybe aren't as developed as they are in a city like London or New York, just because of how big they are in terms of financial hubs. So career progression wise, there's maybe more opportunities that I've found here. And that's not to say that you can't have a great career and progress quickly in Canada. It's just that there's more opportunities in Canada or in the UK or in New York, so I can progress faster. So I'm not opposed to moving back to Canada, but it would have to be the right opportunity with the right organization. And I don't see that happening until they start to develop more growth in terms of global investing within Canada. What is your opinion on trading for yourself compared to trading for a corporation? And do I think that it's necessary to leave Vancouver to progress quickly? So in terms of trading for myself versus trading for a corporation, so I think that there's a lot of traders who trade for themselves who don't really have much of a clue what they're doing. I think that there's also some traders who trade for themselves who know exactly what they're doing and they're quite good at it. I think trading for a corporation is different, and what I do day to day is different from what I would do if it was myself. There's much more strict risk parameters. I have access to much more in-depth research. I get to deal with much larger sums of money and in much different environments. So if I was trading for myself, let's say, I might be able to buy stocks and options, but I can go with my current company. I can go and buy, I could do a $10 million trade or very large trade. I won't discuss exact trade sizes, but the numbers get very large and the opportunity set's much larger. I couldn't probably invest in emerging market bonds because I just don't have the capital to be able to do that. Whereas here, I get that opportunity. So I think doing it right is cool. I just don't think a lot of people do personal investing correctly, and generally are better off from a long-term investment perspective, just to put it in like a passive ETF or depending on what you're looking for. That being said, I think trading yourself is a great way to bring something that you can talk about in an interview. I have friends who, I have one friend in particular at Citi who trades who's in S&T at Citi, who he had a personal portfolio, and that's really what he learned from and sort of pitched to the Citi guys when he got there, and they really like that. So it depends on what you're doing it for, but it can be a lot of fun. And then in terms of leaving Vancouver to progress quickly, I think you can progress quickly in Vancouver. I think there's more luck involved. This all depends on what you want to do, right? In Vancouver, there's no sales and trading essentially. There's very small equity research groups. There's investment banking, but only metals and mining, and there's some small asset managers. It's tough just because of the size. Because if you get stuck behind somebody who's a couple of years ahead of you, and they're they're going to get promoted first. It can get tough. So I don't think it's necessary, but if you can leave Vancouver, I think it certainly helps. Let's see. What is something you wish you learned over the years that you wish you knew when you were breaking into first jobs, internships, whether it's people skills, networking, golf, or something else? Yeah, I mean, I do wish I knew how to play golf better, because I was supposed to go golf in Scotland, and I can't golf to save my life. So people skills, I think the honest answer to that is that I wish I just put less pressure on myself, and just enjoyed the process. Like, looking back on it, it was a lot of fun. I got to do a lot of really cool stuff. But at the time, I was so focused on where I was going to end up, and it's quite a stressful process, job searching and stuff like that. So yeah, I think just enjoying the process more. Like, yes, learning to build relationships is great. There's some hard skills that I picked up that are useful, that I wish I had back when I started. But I think a lot of it is just enjoying the process and trying to enjoy doing stuff day to day. Is there flexibility to take any trades, or have to pitch it and wait for a green light? So the way it works is I have a trade blotter. Well, so first I'll be in the discussion room and sort of discuss where I think opportunities may be. So I may be pitching pitching countries and saying, oh, I think that we should seriously look at increasing exposure in Romania, let's say, or Romania. Let's not say Romania. We're going to really increase exposure in South Africa. I think that that's a really great investment, and so I'll be part of that process and that discussion. Then a portfolio manager will decide, based on the information I give him and the information of all the other analysts and all the other stuff he reads and all that stuff, will decide, okay, I want to buy some South Africa, and he'll put it on what we call the blotter. Once it's on the blotter, I have I have the choice when and how to execute it. So I may go and execute it right away and just go into the market. I think this is as low as the price is going to go. I'm going to buy it right here. I may also look and say, oh, I think that there's some, the South Africa has their GDP coming out tomorrow, and I think that that's going to be really weak. So I'll wait until tomorrow and then invest it. So once it's on the blotter, I have the option on when and how to execute it. And so we'll sometimes work around US macro events, or local macro events, or even just technicals within. Sometimes you'll see that everybody's buying, and if you wait 2 or 3 days and let that clear, you'll get better pricing. It's great from the perspective of getting to work from start to finish. These are awesome questions. Let's jump forward and start going through the slides, and we can keep asking questions at the end. Getting a job. I mean, this is hopefully what you're all hoping to do at some point. I think just how to find job postings was something I got asked a while ago. I actually got my current job on LinkedIn. I found it on a LinkedIn job board. But I think in terms of wider net is better. LinkedIn, Indeed's good. SFU has an internal job board I recommend. Just Googling like finance jobs in Vancouver is a great way to find them. I've done that before. I think from a job board perspective, the wider net you cast, the better. You just want to get as much as you possibly can and narrow it down later. I think people talk about networking, and you often hear people sort of pitch networking as a solve everything, and like, oh, if you just network more, you're guaranteed to get a job. Networking is really important. I think it's great, but I also don't think that it solves all your problems, and it's not necessarily a short-term fix. If you're sitting sort of in you're about to graduate and you don't you need a job in 4 months, networking probably isn't going to be the greatest tool in your toolbox. Recommend, in terms of networking, I find a lot of people are really sort of scared. Me and Azam had this discussion where we talked about just showing up is often enough to impress people. I shouldn't really be pitching you guys because you're the ones who have showed up for this, but it's really a big part of building your network and building your career. It's just, if you just go and try your best, people will respect it. So just, with networking, start small. If for you small is going to a networking event, great. If it's meeting somebody for coffee, great. If it's sending them a message on LinkedIn, great. Whatever it is, just do something small. Your goal in networking should not be to get a job right away. I have people sometimes on LinkedIn will message me and they're like, could you recommend me for this job at your company? When you're networking, it's more of building a long-term relationship. You want to try and, so it's not something where you're just immediately asking for a job. It's, hey, Asm, and we'll talk about how I'm doing and how he's doing. And, I always ask how the ESS is going, and he asks about what my job is. And it's sort of an ongoing relationship. So when one of us, when he messages me and says, hey, Devin, do you want to do this session? I'm like, yeah, because we have that relationship where if he just messaged, if somebody from U of T I don't know messaged me, do you want to do a session? I would probably be more reluctant because I don't know them. And then people, I think, are way more friendly than they think you are. I accept 100. If you include a written message on your LinkedIn request, I will accept it. And yeah, it's fine. And I think there's a chat. It's nerve-wracking. Yeah, I wouldn't be worried about asking bad questions. One piece of advice I would have is people love talking about themselves. And so, go look at their LinkedIn page, see 2 or 3 jobs that they've had, and ask them questions about it, and you'll get through. And the honest truth, if you do ask a question that's maybe not great, they're not going to care. Like I said, showing up is 90% of the battle, and they'll respect that you showed up, and they'll respect that you've tried to make the effort to ask good questions. It's, again, people are really friendly and really helpful. You just sort of have to give them that opportunity. And sometimes you may have bad experiences in networking. I've had experiences where, I went and we didn't click and I don't talk to them anymore, but the downside's very small. And so I, just say, put yourself a little bit out of your comfort zone, and you hopefully you'll do okay. And you will do okay. So yeah. All right, let's jump to the next slide.
Sorry for interrupting, Devin.
Yep.
Just on that question that Christopher asked. I understand what he's asking as well, in the sense that, especially in the area of finance or finance-related positions, you really, and I remember this when I was an undergrad and going to a networking session, I really didn't want to ask a question in an area like this if I didn't know what I was talking about, and I didn't know what I was talking about, and you become very tentative. It seems like the people that obviously, you're in these groups, and the people that are asking these questions have got these crazy portfolio ideas, have worked with models, and you're listening to these questions, you're like, oh my God, how does this person know so much and I know nothing? So I get that, especially in this area, and especially if you want to just break in. Best advice.
I totally agree. It can definitely be scary. I think one, don't underestimate how good a quick Google will do. And I'm not joking. Like, if you Google emerging markets trading, or if you Google emerging markets, I think you will find 3 or 4 great news articles about something. And if me and you, Asm, we're going to go and sit down and have coffee, being able to, you've Googled emerging markets, the top headline is that Turkey has fired their central bank governor again. And you say, hey, what do you think about Turkey firing their central bank governor? And you look like you know what you're talking about, right? But you're really just, and then you just let me talk and talk about something I'm passionate about. So I think one, just even a little preparation goes a long way. And then 2, I think, don't overestimate the impact a mistake will have. I think everybody is asked questions that maybe were a little misplaced or misworded, or you asked an investment banker to pitch a stock, or you asked an investment banker something you should ask an equity researcher. People understand that students are students, and they're not going to penalize you for that. They're going to appreciate that you've tried, and it's the downside of asking that question, even if it's a question that genuinely is sort of misplaced, is very, very, very small. And the other thing I would say is, sometimes if you are in these group settings, sometimes it's okay not to ask a question. If the level you can get, you're a little bit out of your comfort zone, is just going to it and listening and hearing, great. All right, you've showed up, you've learned a little bit. Maybe go and shake their hand and say nice to meet you at the end, but don't ask a proper question. That's okay too. You've got to do what you can do, and what's at a comfort level you can get to. And if that's where you're at, I think that's perfectly okay. I don't think anybody should judge you for that either.
Okay, thank you.
Materials. I think one thing I would just flag in terms of this, and I won't talk about this very long, is resume. Resumes in finance tend to be very traditional. I've put an example there. So it's going to be all black. It's going to be one page. If you Google template finance resume, there'll be 100 on the internet. But just be sure that your resume is appropriate for what you're applying to, right? If you're applying for sort of tech positions, you're going to have a more colorful, you may even have a 2-page resume. If you're applying for those investment banking jobs, it's going to be 1 page, black, very traditional. And then cover letters. So I'm going to give some advice that nobody would usually give you, because people will tell you to write a cover letter for everything. In a job hunt, you're going to be applying for some jobs that you really want, and some jobs that you're like, I would do that for a year, but it's really not something I'm passionate about long term. For the jobs you really want, really put in the effort, right? Write an amazing cover letter, take the time. If you want to tweak your resume a little bit, do it, like really put in the effort. And for the jobs that you're like, I might not, I'm kind of meh. Honestly, I don't necessarily write cover letters for those, but I just try and apply to a ton. So I'll have a generic or close to generic cover letter. And I think for me, that process has worked. Obviously, it would be ideal, in an ideal world, you'd have a cover letter for everything, but you will be time constrained when you're job searching. And so put the effort into the jobs you really want, but try and put in an effort for the other ones. Because what you'll find is sometimes companies won't read cover letters. Sometimes somebody will see a resume and really like it for whatever reason. So you'll still get those interviews. So you'll have sort of high volume applications and then low volume, high quality applications as well. I think that's the best way to do it. But I think you'll find a lot of people disagree with me. So that's fine. If we jump to the next page, interview practice. I am shocked at how much people struggle with interviews sometimes, given the resources available. I think that you really want to practice interviews. It's really a skill that's going to be valuable for you. So, one, I guess I'm going to throw Azam. Azam's going to get busy now, but go talk to Azam or Career Services at SFU as well. Career Services will do interview and mock interviews with you. Just have a friend ask you questions. Look up. So one thing I do, look up your interviewer on LinkedIn. Look at the company's website. You're going to pull questions from that. So you can look up and say, oh, this, one thing I did when I was looking at interviewers from PineBridge was, oh, they've all worked at PineBridge for a long time. They've all changed roles. And so I asked a lot about how do you develop talent internally? Why do people stick around so long? Ask questions about culture. And so tailored my questions to what they were looking for. Same thing with their company's website. Have they made a big acquisition recently? Can you find, PineBridge, for example, publishes blog posts on our investment process. What can you find on those blog posts? What will they tell you? Our emerging market bond funds are available in mutual funds in Ireland, which means when I was interviewing, I knew what positions were in the portfolio. And so when they asked me to pitch something, I could talk to them about what they had in their portfolio. Be really polite to the receptionist and remember to send a follow-up email. So I had an interview where it was at a Canadian pension. I showed up, sat down, was discussing with a woman across from me who was clearly interviewing for the same job. And she starts talking about how at her previous internship, she and her coworker had done hard drugs. And I remember sitting there while all the receptionists and there's a group of interviewers all stopped talking and listened to this story. I remember being like, there's a time and a place for that story and it's not there. So just be conscious and try and make a good impression. In terms of resources, 400 IB questions. If you Google it, you can find a PDF of it. I find that those get asked across all areas of finance. You don't have to be perfect, but the night before an interview, I'll typically scroll through and just remind myself, oh, that's how that particular trick gets asked and stuff like that. And then practice the common questions. So like you will be asked, I guarantee you, in every interview you ever ask, tell me about yourself, walk me through your resume, or something to that effect. So I practice that question. I know exactly what I'm going to say because I know they're going to ask it. And in that question, again, the night before the interview, I'll plan out, oh, here's what I'm going to say. And oh, I know that this PM or this interviewer has done this in the past. I'll try and tailor my response to that. And so I'll have a pre-made response. And so it sounds like I'm a really fantastic speaker with a really, I'm polished, and the reality is that you just know it's coming. I'll also sit and think up, have 2 or 3 stories of how can you'll hear something like, tell me about a time that you have dealt with conflict in the workplace. I'll have 2 or 3 pre-made stories for a time that I maybe struggled with something. I'll have a story for a time that maybe I had something that worked really well, and so I'll have a few stories that I can just pick up and tell, and know how I'll tell them. I'll work through the pacing. So think about those common interview questions and prepare for them, and then send a follow-up email. Again, this is one where I don't understand that a lot of people won't do it, but this is just a great way to, if there's a coin flip between 2 people, you sort of put yourself in that position. So I think people maybe underestimate the importance of interviewing, but you can do a lot of preparation and make yourself a really good interviewer. You just sort of have to put in the time, a couple days before your interview, and you'll walk in, and if you do the preparation, you'll be more confident. That'll come across, and that'll put you in the best position to get the job. All right, let's jump to the next slide. Excellent. So we're going to do a bit of a case study. Before we jump through that, is there anything that people want to ask at this point?
Sorry, yeah, before you jump into the case study, again, for everyone here, there's not a ton of you, so this is a great opportunity. I'm going to speak on behalf of Devin here, and if you have any further questions, I would add Devin. It's okay to add people on LinkedIn. How do you feel about that? Okay, great. I just wanted to throw that out. Definitely a ton of great information so far before we transition to the case study. Again, in terms of talking to me about interview questions, Devin and I have spoken numerous times, and it's really about just speaking and talking anecdotally. I think when he mentions anecdotes, it's really important that you think about those things. I just had somebody else ask me to be their reference, and they really want me to be a reference anecdotally for them. regarding their participation in activities and at SFU, either part of the ESS or something else that they've done. So I can't stress the importance of just practicing as much as possible. Thanks, Dan.
I'd also say people, whenever I say that, some people will be like, oh, I don't have any good, I don't have any good stories. Like, if you take the time before, you can sort of prepare and not lie, but set up a story in such a way that it sort of really emphasizes your skills. So, maybe you don't have a time or a story about a time you failed, but you do have that story about the time that you, in your intro economics class on the midterm, you maybe didn't study as much and as you should have because you were new in university, and then you didn't do well, but you recovered on the final and got this amazing grade. Or you don't really have a great story about leadership, and you've never sort of and you're not sure what to say, but you did organize a picnic, for your a surprise picnic for your friend's birthday. Like, you can set these things up, and if you think about these stories prior to the interview, you can find out a way to really show your best side, because everybody has something that they can talk about. Everybody's interesting. It's just a matter of saying it in such a way, and talking about it in such a way that you can express that to an interviewer. Perfect. All right, case study. So Azam asked me to walk through sort of how I would look at a company and what that process is like. So I did this quite a bit earlier. I don't do it as much now, just because the role has transitioned. But decided to pull up this case study looking at the Canadian railways. I think the Canadian railways are great because railways are fairly similar but not identical. And I'm just going to run through some of the key ideas that are expressed in it, and what we might look for, and all that good stuff. So the first thing we have in front of you is what's called a comps table. And so what you'll see on the left is you'll see a list of company names. So CN Railway and CP, those are the two big Canadian railways. You'll also notice the status from 2016, 2017, because that's when I made this presentation, or when I made the comps table, but the data is sort of valid. And then CSX, Norfolk, Union Pacific, and Kansas City Southern. So the bottom three there, Norfolk Southern, Union Pacific, and Kansas City, are all shipping companies, and CSX are all railway companies, sorry. And CSX has a little bit more transportation, sort of trucking, as opposed to traditional railway. I do think that they have rail, but I do believe that there's more trucking involved. And so what we have here is we have Ebitda, which is the multiple, and I'll talk a little bit about what that means. We have price to cash flow, we have price to earnings, we have EV sales, and we have price to book. So I'll first talk about what each of those multiples is, and then I will touch on what we're looking for in each one. So starting with Ebitda, just quickly going through that, that's going to tell you what the total value of the company is, divided by what the earnings to the total, to that total value. So that value will include debt, is essentially what I'm saying. If you think about the way a company is financed, some of it will be financed with equity, some of it will be financed with liabilities, most commonly debt. There's other things we could talk about, but for the sake of simplicity, so there'll be a component that's debt, there's going to be a component that's equity, and Ebitda is going to be the earnings that are attributable to all of that. So the reason that this is going to be important is that it avoids potential issues from capital structure. So it won't give a company with high leverage, with a lot of debt, an advantage over a company with very little debt in sort of theory, because you're looking at it from a capital structure neutral top-down look. And so that's why we're using Ebitda here, because interest has not been taken out, which means that the interest that's going to be paid to those debt holders is still included in that Ebitda number. Ebitda it's a finance invention, earnings before interest, taxes, depreciation, and amortization. What you can think about it as is sort of a adjusted form of earnings for a company, for an overall company. EV sales, we're taking that same enterprise value concept, both debt and equity, and we're just dividing it this time by, instead of earnings, we're now just looking at it in terms of revenue, so overall. Then price to cash flow. So here we're now no longer looking at the EV, we're looking at price. So we're just looking at the equity component, which means that this cash flow is going to have that interest removed. So we're just looking at the valuation from the equity perspective. So here we're going to look at price to cash flow. That's going to be a share price divided by how much cash you own per share. Price to earnings is going to be how much you get in earnings. So accounting earnings versus cash earnings. I won't get into that, but they're two separate concepts. Sometimes they're very similar. Sometimes they're very different. Depends on the industry. But both can be important. Typically, most analysts would argue cash flow is probably more important from an economic perspective, but for a quick look, earnings is simpler and easier to look at across a variety. And then price to book. So how much are your net assets worth overall? And then, so quickly running into these values, you'll notice that the values of the Canadian railways, before I jump into that, so you'll see that there are three columns in a lot of these: current, 2016 expected, and 2017 expected. The reason that we do that is, so that's basically saying what is the EV EBITDA looking at the current is the past 12 months. So what actually occurred. EV EBITDA 2016 expected is the year of 2016. What do we expect to happen in 2016? And EV 2017 is what we expect to happen in 2017. The reason we do that is sometimes things happen, unexpected stuff, and therefore sometimes trailing is not the best. And so typically we'll look at a forward, what we expect to happen. You'll notice that the Canadian companies are valued slightly higher than the US ones. They have a higher multiple. This is essentially just because the US, or because of the Canadian ones are generally better assets, they have better railways, but two, Canadian stocks have a sort of permanent investor base in Canada, where US stocks may not. Great, so let's just zero in on CN and CP for a second. Why do we see these separate valuations, right? We see here that CN gets a slightly higher valuation for CP. So why is that? Why do we get this higher valuation? Does that mean that buying the cheaper one, CP, does that mean that that makes a better investment? So let's jump to the next slide. So one of the things that may determine valuation is just size. So you'll see that Canadian National is significantly bigger than Canadian Pacific in terms of market cap. It's worth 66 billion, CP is worth 29. So sometimes size can impact valuation. I would argue especially in businesses where scale is really a potential contributing factor. So there's two ways that it can contribute. In something like railways, if you own a lot of lines, you may be able to work off that, right? If you own all the lines going into the oil patch, so you do all of the oil shipping, you then may have the ability to make more money shipping that oil from there on down. So there may be sort of advantages from scale that way. The other thing is sometimes it reduces risk. So in railways, it maybe doesn't matter, but let's say these were mining companies, a large mining company with multiple mines deserves a higher valuation because it's diversified, and so therefore should trade at a higher valuation. Let's jump to the next slide. So indeed, CN is bigger than CP. These are their rail layouts. The other thing that really separates CN, and one of the reasons that it trades at a premium, is that it has operations all the way down to the Gulf of Mexico. And at the time that this was occurring, oil prices were moving up. They then promptly crashed, but we had increasing oil prices, and so those rails in the US were considered really valuable. So what that meant is that we were giving, we talked about, oh, CN is valued slightly more than CP. And again, here's one of the reasons. It's bigger, so maybe they get some efficiency gains, although both are really large companies. But additionally, the assets are slightly different. So CN has those assets going down to the Gulf of Mexico, which are maybe more valuable to us as an investor. We think it will be more valuable to us as an investor, and therefore maybe we need to value those slightly more. Let's move to the next slide. The other thing that it may be is this is a breakdown of their revenue stream. So maybe it's not just that CN has that set of railway operations down to the Gulf of Mexico. Maybe it's got something to do with the mix of businesses. So you can see it looks like CP has a lot more business segments. It's just mostly because they report it into multiple business segments or into more business segments. But generally, you'll find, I'm not going to dive into this, but maybe there's some breakdown in the business segments that they operate in that makes CN more valuable or makes CP more valuable. And this is something that you'd look at and try and, again, gauge, is the premium that CN trades at, is that worthwhile, or is it not? So let's move to the next slide. Right, so we've now sort of looked at a high level at the two companies, right? We've figured out CN is in the market slightly more expensive than CP because CN trades at that premium multiple. And then we've looked at the businesses and said, yeah, maybe that makes sense. They've got some better assets. Maybe they're a little bit bigger. They've got better assets. Maybe they have a better industry mix. And so what are we going to do now? Well, the next sort of step is we're going to look, and we're going to do that more in-depth research. So we're going to go and look at financial statements. So just running through the three financial statements, the three main financial statements. First, we would go and look at the income statement. This is going to be accounting-based income. So not necessarily economic income. It's not necessarily cash flows. But it's based upon accounting principles. So, take a course in accounting, get a degree in accounting if you want to really understand it. But this is going to essentially tell you how much did you make? What was your net income? So we go and look here, is it growing? Is it shrinking? Looking at things like from this, you could calculate something like your profit margin, how much tax are you paying, how much you're paying in interest, variable factors like that. And then if we jump to the next slide, the other two factors we have are the cash flow statement. So this is where we go from income statement, that was accounting income, to cash flow. This is going to be actual cash. So this is cash coming in and cash leaving. This is dollars and cents. This is real money. So accounting income maybe can be manipulated. Maybe it's not quite accurate. Maybe you don't get paid but from your customers for a really long time, so it's not accurate. But your cash flow, that's going to tell you how much cash you're bringing in, how much cash you're leaving behind. And then the balance sheet, this is going to be how much stuff do you have? So looking at, do you have enough cash to maintain operations for the next 6 months? Do you have huge pension liabilities? Maybe how much debt do you have? For a railway, it maybe doesn't matter, but for a manufacturer, do you have enough inventory? Stuff like that, you're going to be able to see. All right, we can jump to the next slide. So yeah, so that's sort of what I'd look at in terms of looking at a company. You're going to start, do a high level screen, look at multiples, what looks cheap, what's expensive. You might look at different things. Then you're going to sort of go, okay, CN looks slightly more expensive. You're going to look at your industry analysis. You're going to look at the company's assets. Why is it cheap? Is there does that make any sense? And then you're going to look at sort of the more in-depth financial statements, and you may from there build go even more in depth. You may build a model and do all that stuff, or you may discover that it's sort of fairly valued and decide that you're no longer interested and go and start again, look and find something else. Awesome. Are there any other questions at this point, either about that or about career stuff?
I have a nerdy question.
Yep.
The fact that the CP and CN rails are there's some government ownership there, right?
Yeah.
Don't they depreciate assets differently from a private company? And don't you have to look at things like what their sort of reporting strategies are?
Yeah, you're right. You should be. So that's a very good point. Yeah, so within any financial statement, there's a section called the notes.
Right.
And the notes are, again, I talked about sort of accounting profit versus cash profit, and how sometimes things can be adjusted. If they do adjust it, which a lot of managers will, and some will do it genuinely to try and make it more accurate, and some will do it because they want to try and get a larger bonus at the end of the year, but they will report it in the notes and tell you what they did and how you did. And so if you want to go and reverse that, you can. And something like depreciation, if CN and CP report depreciations differently, so depreciation is going to be added back when you get to cash flow.
Right.
So maybe we see that one of them will have a consistently higher cash flow. And if that's the case and it's being done incorrectly, then we need to adjust that. Over if over a 10-year time frame, it won't matter. But over a 1-year time frame, just looking at 1 year, they may push all the depreciation up front. It may have a much larger impact.
Sorry, that was a nerd question there.
No, that's
we have a question here.
How does one approach building a 1 or 2 page stock pitch? What are the necessary components of a pitch? Is it mainly thesis based or comps, DCS, and metrics based approach? Yeah, I mean, I would say it more depends upon what you're building a 1 or 2 page stock pitch for. So, if let's say I'm going to a PM who's like an expert in railways, and I just want to flag to him, hey, I think that CN is particularly expensive right now. I think so. It's really more just to bring to his attention. I probably focus more on just multiples, valuation, things like that. If I'm going to a PM who's maybe new to a sector and doesn't know as much, and I maybe focus more on industry themes and stuff like that. So thinking about your audience is going to be important. In general, I would say having comps is really important. And I think comps, I'd like to include comps because they're essentially everybody in finance understands them. I can explain quite quickly what the comps mean. There's no sort of assumptions in it. So it's quite quick to explain and quite short, and it's not going to take a ton of your time. Something like a DCF, if I have a model for that company, maybe I'll include a DCF. But if I'm just doing a 2-page pitch, doing a DCF takes a ton of time, and then I'm going to make a bunch of assumptions to build my discounted cash flow model. And so, again, situation-based, generally, I wouldn't include DCF in that. I think generally, if you can't write out your thesis in a paragraph, I don't think that your thesis is strong enough. You want to be able to say, I think that CP is, while CP is trades at a slightly higher multiple, its clearly superior assets mean that it should trade at an even greater multiple. Therefore, it's a buy. One sentence, two sentences, good to go. Yeah, and then I think discussing sort of, a couple of paragraphs on operations and what the company does well, a description of assets, and then a little bit on industry overview can fit in there as well. But it seems ambiguous when they're asked for job applications. For example, I've seen them requirement for Analysts and a boutique PE firm. Yeah, they are ambiguous. So Analyst, James Reif, who leads the hiring process there, he's one of the co-founders. He's really looking for passion. So if you put comps in there, if you put, I would say in a job application context, it's really about trying to show off as much as you can, as opposed to maybe actually picking a stock. And on top of that, you can use one stock pitch for multiple job applications, right? So maybe in that particular case, it does make sense to include the basics of a DCF if you know how to build a DCF. I wouldn't feel pressure to build a DCF if you don't. One of the great things about Canalys when I was there is they taught me how to build a financial model and have a very rigorous, complex process for doing that. But I would say the main thing I would include in that is comps, and then walking through things like industry overview, company operations. One of the big things that we're seeing now is ESG. So talking about what ESG factors do you see? That's something that's really going to generally separate you.
What are ESG? Can you remind me?
Environmental, social, and governance factors. So looking at if you're, and I think people can oversimplify them, right? If you're looking at an oil company, it's very easy to say, oh, the negative E. But if it's a company that's really improved its carbon emissions and has some incredible carbon offset technology, maybe that's not so true. So but again, those environmental, social, governance factors, those are going to be a big, an increasing component of finance. So maybe touching on those. I think in general, from a job application perspective, if you're putting in the time and effort and passionate about it, I think that shows through, and I think that's really what they're looking for.
Hey, I'm going to jump in here because it's been an hour and a half, which is great. Some really passionate questions, very, very good questions. An amazing presentation, Devin. But we are going to move towards maybe wrapping it up and maybe anyone asking some final questions. I did want to summarize things by saying, or maybe asking one summary question in terms of just a lot of our students who are at different levels in terms of an undergraduate degree, maybe graduate degree, just, breaking in advice, Devin, because obviously you're well-heeled before you even graduated, but for those who are not sure how to just break in, any passing words that you might have?
Yeah, I think, it's competitive and job hunting can be incredibly tough, and it's, I don't think people really talk about it, but it's a full-time job hunting for a job sometimes. And regardless of who you are, you're going to get rejected a lot, and that's maybe not the most fun, but it only takes one success, right? And people are willing to take a chance, and you never know when that's going to be, right? So I talked earlier about, if you see something that maybe isn't exactly what you're looking for, but you kind of do, and maybe that gets your foot in the door, apply, right? Take a chance. And one, you never know what you're going to like and really enjoy. And two, once you get your foot in the door, that sort of can snowball and stuff like that. I would just say, be willing to work hard and do anything. Don't get too fixated on one particular, don't just fixate on investment banking. It's okay to have that as long-term goal, but and apply to investment banking. I'm not saying don't, but maybe also apply and see if you can get something in accounting, and try and apply and see if you can get something in research. And then as you grow and develop your career, you can move into your long-term goal. And then be open, be honest, apply broadly to as much stuff as you can. Don't be afraid to reach out to people. Like I say, I'll accept all LinkedIn invitations that have a note. And I know a lot of SFU alumni do, right? Send them a message, say, hey, I'm a 4th year student at SFU. I'm in job search process. Here's kind of what I'm thinking. Would you mind having a quick call? 90% of people will say yes. SFU's got economics, particularly people who have been through 201 and 302 know that it's a challenging course, or know that they're challenging courses. So you're going to get recognition for that because you've gotten through them. And so, I guess ultimately you only need one yes, right? I guarantee it doesn't matter who you are, you're going to get a lot of no's. It's just the way the job market works, but you only need one yes. And, I think when I got to London, I think I applied to like 250 total jobs. So that's a 0.4%. 0.4% success rate. It doesn't sound great, but at the end of the day, that's, you've just got to show up and put it in, and you'll get the opportunity. It'll show up.
And last final question. I'm sorry for taking everyone's time, but I hope this is a good one and will benefit everyone. How do you avoid, and this is no disrespect to banks, because it's just an easy way to go, right? These guys, and I know when I graduated with my degree, I didn't want to just go to the Royal Bank and just become I'm not saying it would have happened, just become a teller and get trapped, right?
Yeah.
What would you say to that? I mean, and I'm not disparaging the banks here. You know my question here.
Yeah, I know what you're trying to get at. I think the job market's changing in that people sticking in job, like nobody really, it's not common now to work 30 years at the same place. And so I talked about sort of how to get your foot in the door, sort of taking, being scrappy and taking anything. From there, think about what you want, talk to people. If you're sort of, if you find, let's say you start, you're a teller and you love interacting with people, but find the work isn't challenging enough, go talk to the financial advisors, for example, and, sit down and have, ask one, hey, can you grab a coffee? I'd love to hear about your role, and, try and develop internally. And, while you're doing that, think about, oh, well, if maybe I'm interested in being a financial advisor, where else can I go? Who else can I talk to? So I think early on, when you're first breaking in, like you mentioned that I had a couple internships, when you're first breaking in, you just kind of got to take what you can get and, be scrappy and work really hard, but don't lose sight of where you want to get to, and keep talking to people and keep revising those objectives. And, just because you're a teller today, if your goal is to be a financial advisor, your goal is to change, organizations and the workforce are changing. That is 100% a possibility. It's people are happy to help you. You just sort of have to, but again, I said this at the beginning, show up and just sort of be there and try and introduce yourself when you can and all that stuff. If you do that, people will respect it, and the opportunities will be there if you sort of work towards them.
That's perfect. Devin, I think we're going to wrap it up here. And if there's not any other questions, I would encourage people. One, I think everyone here is part of a SFU Economics LinkedIn, but reach out to Devin through that. He's on our LinkedIn, of course. I want to thank you, Devin. For me, this was like amazing. I learned so much. just valuable insight, especially in terms of just defining those different areas in finance, which I think was very valuable for all of us. I appreciate this. Carmen, thank you very much for being the backbone here as usual. But if there's not any other questions, thank you very much for attending.